What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over chapter 2 of our mini course or our mini series on day trading. Check it out. Alright guys, so in this video here what we're going to do is we're going to go over the next step. This is chapter 2, and basically here what we want to do is we want to identify what type of trader you're looking to try to learn to be. You know, this is the time in your trading journey where you really are looking for what type of trader you want to be. Maybe you want to be a swing trader. Maybe you want to be a day trader. Maybe you want to be both. Maybe you want to scalp momentum. Maybe you want to buy pullbacks. It all depends. There's so many ways to do this, and this is the time for you to figure out the first one you want to try. Because as a new trader, one of the very first things you want to do is try a few different techniques in the safety of a simulator so that you can kind of figure out which one it is that you want to do, right? So now let's go ahead and jump in this video. Smash the like button for me real quick. Helps out tremendously if you're enjoying this series. So what is a swing trader, you might ask yourself? Well, swing trading is the practice of buying a stock one day and holding that position for a minimum of at least an overnight hold and closing the position the very next day. Now, if you were long the stock, right? So if you open the position, let's say on a Monday afternoon, that means you bought the stock. Well, then the very next morning, you would be looking to sell it at some point, maybe in pre-market, maybe after the bell rings. The point is that on Tuesday, you are looking to close this position by selling out of it and either booking a profit, a small loss, or break even. The point is it's an overnight swing trade. Swing trades can last, overnight, days, weeks, months, right? Anything over months, I think, in my opinion, typically is more of an investment than anything. But hey, you could have a swing trade that could take you over a year to close out. Who knows, right? The point is that swing trading is buying on one day and at a minimum selling it the next day, or shorting it on one day and at a minimum the next day buying it back, covering the position, right? Most often than not, swing traders hold their positions for days, weeks, or even months before they close that position. Now, what is day trading? That's the next thing you might ask yourself, because we already know what swing trading is. So what is day trading? Day trading, simply stated, is the practice of opening and closing position trades, right, within the same day while taking advantage of intraday price fluctuations. Day trading is nothing more than opening a position and closing it within the same day, meaning you either bought a stock and sold it on the same day, shorted a stock and bought back that stock in the same day. It doesn't matter how long or how short period of time that trade was, as long as it happened within the same day, meaning you could have bought a stock in pre-market on Monday, and as long as you sold that stock before the close of after hours, that is in fact one day trade. And very specifically, you need to know that because if you're under the PDT rule, you already know, if you watched the first video, what that is and how that works. So you really want to make sure you watch that first video if you haven't. So day trading, buying or selling a stock within, the same day. So buying a stock at 9:30 in 1 second, selling it at 3:59, or buying a stock at pre-market and selling it in lunchtime, after hours. It doesn't matter as long as it happened on the same day. That's a day trade. Now, what is a momentum scalper? This is probably one of the most popular techniques you'll find on YouTube. And just because it's popular doesn't mean it's the safest one for you specifically as a new trader. So momentum scalper traders rely mainly on watching price fluctuations, on time and sales, on short-term charts like the 1 minute, and they typically do most of their trading within the first 5 to 10, maybe even 15 minutes of the day. After that, when things slow down some, they tend to not do much because they're solely relying on momentum. That's all. They're not really relying much on chart patterns, pullbacks into actual support zones. They're just mainly trading the price momentum of the stock, whether it's up or down. This type of trading might sound appealing, and it is one of the most popular trading techniques you'll probably find on YouTube, but it makes it one of the most dangerous, in my opinion, for new traders, because it's all based on momentum and big size, meaning you're grabbing big share size, big position size, which can send you into an emotional whirlwind as a new trader. Now, like I said, in my opinion, this is one of the most dangerous types of trading strategies to learn out there for a new trader, because especially for a new trader, you don't have day trading education yet, you're just starting that out, and you have no risk management skills yet because you haven't learned how to do that yet. So day trading with momentum scalping strategies is hands down, in my opinion, one of the most dangerous type of strategies that a new trader could learn. What is a dip buyer? So a dip buyer, right, is typically a trader that watches a stock push up, right, without them, and they sit back and they wait for a pullback on that stock. So I'm a dip buyer. I'll wait for that stock to push, and then I'll wait for it to put some sort of temporary top in, and then I'll wait for it to pull back down. And I'll wait for it to pull back down into predetermined support zones, right, that I obviously go over in many of my YouTube videos with DTC Lite students live in the moment, and of course throughout my full courses for DTC Pro students. Now, we'll wait for that pullback into the support zone where I can watch and see if the support zone holds, and then I have an easy area to get long in front of, set a stop loss zone, and have predetermined take profit areas already ready to rock and roll. Much slower of a trade, much easier to learn and establish and take proper sizing in, you know. So what we'll do as dip buyers is we'll let this stock push without us and extend, keeping an eye on volume and price action, and then wait for that pullback into the support level before the dip buyer begins to open a position, aka buy into a stock. This helps the trader establish clear defined stop loss areas with predetermined sell target areas. Well, now you already know about swing trading, you know about day trading, you know about the PDT rule, you know what the stock market is and how it functions. Then you also know what a momentum scalper is, and now you know what a dip buyer is. Okay, so you're learning pretty quickly here. So if you have any questions, please don't hesitate, drop it in the comment section. Remember to smash the like button for me and subscribe to the channel, because you're not going to want to miss the next chapter in this mini series on how to day trade.